Hello and welcome to GP Bullhound's Tech Thoughts. Today is the 29th of October, and we are here with Inge Heydorn for our weekly roundup of all market news. Over to Inge.
Good morning. Yes, this week we're going to focus on the results reported this week. So let's start with the social media track. We have had Facebook as expected. They guided quite cautiously and they reported quite cautiously on Q3 too. So that it was very much in line with our view, and the stock has been hurt afterwards. There are two troubles really in social media, and Facebook are hit by both. Firstly, the Apple EDFA, so the non-tracking problems, and how you can then really look at your marketing and see the effects of it. And the second one is that there are a lot of clients of Facebook that are struggling to get supply, and thereby are going to be more cautious on spending going into Q4. This has been so really the red line across social media, except with Google. Google had, yes, some little bit weakness in YouTube, but in general, it was a quite healthy report. And that's quite interesting. And I think a sign of the fact that people have moved some of the money from the iOS system to the Google Android system when it comes to spending. We have definitely seen that on the gaming side. So on social media, Facebook disappointing, Google I would say fine to good even, and then you had Amazon last night. Their marketing ads money went or growth went down from 90% level down to 48. So that's not good either. On top of that, Amazon is also struggling with supply. On top of that, they're also struggling with cost inflation on the employee side, and that this is really something that will be, so say, a long-term issue for a number of vendors, and especially for Amazon. So the difference between them and Apple last night, which both reported, is the fact that I think cost inflation is easier to handle for Apple, especially on the salary side, than it is for Amazon. So that's the social media side. Going over to semiconductors, we're seeing some of the reports from semiconductor companies and semiconductor equipment companies this week. So KLA, Tencor, for example. And the reader is firstly supply issues, as Apple stated last night. So there's still shortage in the marketplace. On top of that, on the semi-cap equipment side, there is struggling with getting products out in the marketplace. So they're really guiding for really strong first half of next year also, given the fact they haven't been able to supply everything from this year. But on top of that, you can see the announcement of number of new factories coming out all the time. So that really bodes for a healthy 2022 for the semi-capital equipment stocks also. Going over to gaming side, and on the gaming side, we saw Ubisoft coming up with numbers yesterday. They were really good for the quarter, but the guidance into Q4, so the Christmas quarter, which is their Q3, was very weak. And that's really no surprise, because they had the Valhalla release last year, and they don't really have any strong releases this year. But 22 to 24% drop year over year is not a good indication on the momentum of the business for Ubisoft. So I wouldn't be surprised if it trades down a little bit today on the back of that. But in general, gaming has been strong, and really the good highlight in the Amazon report was the gaming side. So going over to the more positive side, where we can really see strength and what we would really like for the moment. Software, ServiceNow, really strong numbers. Microsoft, really strong numbers. Both of them are talking about acceleration in the marketplace for demand for digitalization and software. And you can also see acceleration at Azure, the cloud business of Microsoft. You can see the same for AWS yesterday for Amazon, although Google Cloud was a little bit down, but still very healthy numbers. So to finish this off, in terms of portfolio, we're still staying away a little bit from social media and see how Q4 plays out. We are really looking forward to more software reports. We are really like software. It's a really good hedge against cost inflation, and it's also a thing that will not be affected by supply issues. So that's really a key area for us in terms of investing for the moment. On the other hand, we are also long semi-capital equipment stocks, which are not that sensitive to supply issues. Yes, they are affected, but they're so low volume numbers they are shipping, and thereby the effects are not that great. So that was this week, and see you next week. Thank you very much.